Hello and welcome to our channel. Today we have an interesting issue that has raised the worldwide community's interest. Prepare to be surprised as we plunge into the surprising turn of events surrounding how America is preparing for the de-dollarization nightmare. Prepare to uncover the enigmatic reasons behind the surprise and that is fully involved. Let's embark on this interesting journey together. As we uncover the amazing story of how America is preparing for the de-dollarization nightmare, we will discover the fascinating considerations that inspire this major choice as we dig into the fascinating world of the makers. Is it just about the American economy? Join us as we examine and see if there is more to the story than joining us on this journey. Stay tuned to discover the reality behind this. One of the most fascinating financial themes of 2023 has been the de-dollarization movement. This is an initiative by a rising number of countries to limit the influence of the US dollar on international commerce. Countries such as India, China, Brazil, and Malaysia, among others, are attempting to establish trade channels in currencies other than the US dollar. With so much of the global economy reinventing itself in the post-pandemic landscape, would the US dollar's reserve position be the next domino to fall? Before we plunge in properly, let's look at the history of reserve currency. For ages, the globe has had a reserve currency. This is the currency used in the vast majority of foreign transactions. Historically, there were the currencies of a number of European colonial powers, including Spain, France, and England at various times. In addition to the implicit support of the state, these empires frequently backed their currencies with precious metals, especially gold. Following World War I, the British economy struggled to restore its strength. Much of the world's gold migrated from London to New York for safekeeping and speculation in the booming 1920s US equities bull market. America's decisive position in World War II entrenched New York as the world's financial capital and the dollar as its most significant currency. The Bretton Woods Agreement legally established the US dollar as the world's reserve currency in 1944, replacing the British pound. The chronology then jumps to 1971. That year, President Richard Nixon abandoned the gold standard. Since then, the dollar has been backed only by the full faith and credit of the United States government, as well as its military power. Since 1971, many people have argued for the demise of the US dollar as the world's reserve currency. Will the 2020s be the tipping point when these calls turn to action? Why the dollar is king? There are several elements that have contributed to the dollar's continued status as an international reserve currency. One example is the so-called petrodollar. The vast bulk of global oil transactions are conducted in dollars. Because the global oil trade is worth billions of dollars every year and all countries require energy, there is a high demand for dollars to conduct these transactions. While oil is the most apparent example, there is a larger need for a global unit of exchange. Consider the following scenario. A Brazilian farmer sells soybeans to a Japanese condiments firm. It's quite improbable that the Japanese company would have Brazilian real on hand to compensate the farmer. Similarly, Brazilian farmers will not accept Japanese yen in return for their soybeans. As a result, the natural option is to utilize an intermediary to convert yen into dollars, buy soybeans in dollars, and then have the producer transfer those dollars back into their local currency. To that point, the Federal Reserve estimates that the dollar accounted for 96% of international trade transactions in the Americas, 74% in Asia, and 79% in the rest of the world between 1999 and 2019. Banks utilized dollars for over 60% of their non-domestic deposits and lending worldwide. Furthermore, the US dollar is on one side of about 90% of all foreign exchange transactions today. There has been significant debate about developing an alternative to the dollar. The euro appeared to have a chance around the turn of the century. However, the 2008 financial crisis and subsequent political and economic shocks in Europe have weakened the position of a central European currency as a global standard. Japan has its own problems, such as a stagnating economy and a dwindling population. Given the yuan's stringent capital restrictions, China is unlikely to become a reserve currency anytime soon. All other prospective contenders are likely too tiny to constitute a reserve currency. The Swiss franc, for example, is renowned as a stable and well-regarded currency. However, the economy it is linked to, Switzerland, is small and would be unable to handle the massive capital flows necessary of a worldwide reserve currency. The de-dollarization movement has rekindled in the last year. After a period of monetary stability, the years 2022 and 2023 have seen fresh calls for a genuine alternative to the dollar. This began in 2022 when the US imposed broad sanctions on Russia in response to that country's invasion of neighboring Ukraine. Various other international leaders appear to have objected to the concept that the United States might freeze their money in the event of a diplomatic or military crisis. However, geopolitics is not the only contentious subject. Inflation is also eroding the dollar's international status. Since the 1980s, the United States has maintained a low and consistent inflation rate, allowing savers across the world the confidence to store their assets in dollars. Inflation has risen to previously inconceivable heights in the last year, bringing the dollar's security and stability for long-term savings and investments into doubt. And if that wasn't enough, the regional banking crisis has arrived in 2023. Silvergate, Silicon Valley Bank, Signature, and First Republic were all significant and respectable American financial firms that fell in quick succession. Other regional banks are still on the verge of failure at this moment. This is unsettling in and of itself, and it undermines the legitimacy of the US economy in general. People expect a string of bank collapses in troubled emerging nations, not in the world's financial center. Against this context, leaders in nations such as China, India, and Brazil have called for efforts to allow them to trade directly in their respective currencies, removing the US dollar from the equation. This would gradually reduce the function and importance of dollars while establishing a multipolar financial world in which the next tier of economies would have much greater influence in global affairs. What would happen if the dollar loses reserve status? It is critical to recognize that reserve status has traditionally been obtained or lost over a considerable time horizon. It's improbable that the globe will wake up one day and discover that the dollar no longer has worldwide appeal. Rather, in the case of the British pound, it was a multi-decade process that saw it go from the heart of international commerce to a second-tier currency. However, what appears if the dollar progressively loses its position atop the global financial pyramid? For the United States, this would certainly entail reduced access to finance, greater borrowing rates, and lower stock market values, among other consequences. Having the world's reserve currency has allowed the United States to run huge deficits in both international commerce and government expenditure. If foreigners no longer wish to retain dollars for savings, it'll necessitate major belt tightening at home. It's difficult to predict what might replace the dollar at this stage. It's plausible to picture a scenario in which the euro or Chinese yuan eventually became the principal reserve currency, but much would have to happen in global politics to get there. Some economists also advocate a financial system supported by precious metals or cryptocurrencies, albeit implementing such models might be difficult. Investment possibilities for a de-dollarized world. To emphasize, it is highly improbable that the dollar would cease to be the world's reserve currency overnight. However, there is a strong probability that the dollar's dominant position in international trade and commerce would progressively wane in the future years. Depending on how the financial crisis and inflation play out, there might be a substantial shift away from reliance on the dollar. How should investors prepare for this possibility? Diversification is a first principles answer to many financial difficulties, including the weakening of the US currency. Diversification is one of the few free lunches accessible in finance. By distributing wealth over several asset classes, industries, and nations, investors are automatically protected against a wide range of possible catastrophes. Sadly, many people succumb to what is known as home country bias. People are naturally prone to possess far more assets in their native nation, whether owing to familiarity, overconfidence, or convenience. In recent decades, considerable investment in US assets has shown to be profitable, so it's natural why Americans would be inclined to preserve all of their assets in US equities, bonds, and real estate. However, several countries that appeared to be dominant ended up delivering devastating losses to investors. Consider German equities in the 1930s or Japanese stocks in the 1990s as instances of how once high-flying equity markets may suddenly become disastrous investments. In a world where the US dollar has lost most of its value, the simplest defense is to acquire assets denominated in currencies such as euros, yen, Canadian dollars, or emerging market currencies that are projected to naturally strengthen when the dollar declines. Comparing China and America. According to the IMF's Currency Composition of Foreign Exchange Reserves, or COFR, the US dollar accounted for 58.36% of global foreign exchange reserves in the fourth quarter of last year. In comparison, the euro is a distant second, accounting for around 20.5% of global forex reserves, while the Chinese yuan accounted for only 2.7% during the same period. Given its current dominance in global commerce and as the world's second biggest economy, China is one of the most active actors in this endeavor. When combining imports and exports, mainland China was the top trading partner to 61 nations, according to CNBC's analysis of IMF statistics on 2022 trade trajectory. In comparison, the United States was the largest commercial partner for 30 nations. As China's economic might grows, it'll exert more influence in global financial institutions, trade, and so on, Shahab told CNBC. China, which has long been one of the top two foreign investors of U.S. Treasury securities, has been slowly lowering its holdings. Mainland, according to the most recent data from the U.S. Treasury Department, China possessed roughly $849 billion in U.S. Treasury securities as of February of this year. According to historical records, this is the lowest level in 12 years. Aside from regional diversity, there are numerous more particular concepts that may thrive in a world where the US currency loses reserve status. One option would be to invest in emerging markets. In a world where money was flowing out of dollar-based assets, it is likely that nations like China and Brazil would experience significant increases in the value of their currencies and assets. Because the technology sector accounts for a large portion of the US economy's strength, a de-dollarized world is likely to be one in which the technology industry loses value, while other industries such as manufacturing or basic materials gain prominence. Many emerging market economies are built on the latter two industries. The inflation investment strategy also applies to resisting de-dollarization. That is, if the value of the dollar falls, the American economy is likely to experience significant inflation. Energy, precious metals, and real estate typically do well during periods of inflation. An investor could consider allocating to these types of holdings not only as a hedge against a weakening dollar, but also for the benefits they bring during times of inflation or geopolitical upheaval. For decades, there has been much conjecture regarding the dollar's probable depreciation. The dollar's reserve currency position is unlikely to disappear in 2023. However, it pays to be cautious. Inflation, sanctions, and banking crisis all threaten the dollar's reign. To brace for a substantial dollar depreciation, investors should consider globally diversifying their investments. What do you think of the future of the dollar in the economic space? Drop your thoughts in the comment section below. Thank you for joining us on this fascinating trip. Don't forget to like, share, and subscribe to our YouTube channel for more fascinating insights into the world of mega China projects.